The IRS recent $600 rule stirred debate, controversy, and confusion for taxpayers across the country. While intended to prevent wealthy individuals from avoiding taxes, the rule would force millions of people to upgrade their at-home tax software in order to comply with additional paperwork requirements. The ambitious regulation would have also imposed tremendous financial costs and administrative hassles on accountants and other services who likely would have need to increase their fees due to this extra work. Despite the intention behind the $600 rule, its possible effects resonated strongly amongst taxpayers all over America, much more so than anticipated. For starters, 10 million additional 1099-K forms were expected to be distributed, raising significant issues related to cost and hassle associated with such a monumental amount of filing. Thankfully, Uncle Sam eventually decided to back out on their decision and remove the rule from consideration entirely. This is great news for current taxpayers looking ahead towards April 15th, but it doesn't mean that Americans should become complacent or overlook any potential future modifications made by Congress or the IRS. It's now more important than ever for individuals and businesses alike to stay informed about relevant changes to taxation so that they aren't left shouldering an unfair burden at filing season. Tracking all payments through digital payment platforms like Venmo, PayPal, and Cash App is absolutely essential if you don't want any surprises when filing your taxes, even if it means going above what may be required in terms of regulation. Amidst a swirl of controversy between advocates supporting the necessity of tracking payments through third parties against those who insist such an act adds excessive complexity, will this complex, costly puzzle eventually unravel itself? It remains yet unclear how this debate will resolve itself in regards to both wealthy individuals potentially going untaxed as well as everyday citizens facing compliance problems. At the end of the day, every taxpayer should strive towards understanding any potential impacts posed by these changes so that no individual hardworking citizen is left unfairly disadvantaged when filing taxes, either due to lack of knowledge or financial cost associated with upgrades or fee increases caused by new regulations. Keeping yourself up to date thus becomes vital during tax season when it inevitably comes around again. With the backing off of the $600 rule and its potential effects, another question arises about how to protect taxpayers from unexpected changes in taxation for years to come. The answer isn't a simple one, but would likely involve further requirements for individuals and businesses alike to stay informed on relevant changes. Regularly monitoring financial outlets like the IRS website is thus essential in avoiding potential penalties or unpleasant outcomes caused by unawareness. Similarly, accounting and other professional services should strive to keep their clients informed through communication and attentive customer service. This way, all can remain confident that any modifications are effectively managed. It may be necessary for self-employed entrepreneurs to also take an extra degree of responsibility when managing their own tax affairs if they want to ensure everything is up. 2. Date every filing tax season. In any case, even though the $600 rule has been backed off from consideration, preparation and diligence are still essential when dealing with taxes, especially during times when legislation or regulations start changing rapidly. It's now more important than ever to make sure you reach out to an accountant or professional service if you need help understanding important financial matters, in order to avoid any surprises during tax season. If you found this information helpful, please like, subscribe, and tap the bell for more helpful content. You have helpful information in the description to improve your financial status. Thank you for watching.